Welcome back to Rockstock Channel. We are very privileged to have today Patrick Brindle of Piedmont Lithium. Third or fourth time we've had Piedmont on our channel, but the first time we've had Patrick, who is Chief Operating Officer, but I've known you almost since inception of Piedmont, so I want to go into that a bit. But it's September 21st, almost exactly 2 years ago. I think it was September 22nd was Battery Day at Tesla, and Keith was one of 3 lithium CEOs present. It was big news that day. I demarcate the end of Lithium 2.0 and the start of Lithium 3.0 as that time frame. Tesla put Piedmont on the map. You know, everyone who's watched this channel should know that we've been a strategic advisor to an investor in Piedmont nearly since its inception, from seed funding round at $10 million market value. For the bulk of that time, the company has, with the exception of the period of time from Battery Day, I think in September of 2020, to March of 2021, when founders Tazo Arima and Lamont Leatherman were on the front page of the Wall Street Journal. That window of time, Piedmont had a lot of liquidity and a relatively high valuation, but the rest of the time, including now, somewhat underappreciated and undervalued. And I think that's the case still today. I don't want to tease, that out a little bit, but Patrick, why don't you give, your background before Piedmont? And like I said, I think you were on one of the first site visits I went on. I remember we helped bring in Keith to the company, but I remember him saying from very early on that Piedmont's nothing without Patrick Brindle. Like if he didn't have you as a right-hand man, there would be no Piedmont.
Well, Keith is very gracious in his remarks. Rodney, Howard, it's great to join you today. It'll be great to be together. A lot's changed with the company since the last time you were able to visit. And Howard, I think the first time we did meet was in February of 2017 at a site visit that we had both attended, and a small group of investors at that time. I think depending on when folks' start dates are here within the next 10-day or 2-week window, on Monday, I believe we have 39 or 40 employees now. So it's quite exciting. It was timely for us to move into our new home here in Belmont. It's great to have the Piedmont team all in one place. We're super excited about the next 6, 12, 18 months. We've got a lot of things going on. We'll be talking about those this morning, but from those early days in the company till now, it's just been an amazing journey. I joined the business in January of 2018 after almost 20 years as an EPC contractor, principally in the coal industry, specializing in coal processing and bulk materials handling, having worked in various coal markets around the world, US, Canada, expatriate assignments in China, Australia, Mongolia, Russia. As I've noted to others, that was a great first long chapter in my career. And I'm extremely proud of the heritage. My family has been coal miners all the way back to the middle of the 19th century. But as I noted to Jack Ewing from the New York Times when we were together at NAL a couple of weeks ago, it's time to move on. And I couldn't be happier having made the move to an owner's team here at Piedmont. Couldn't be more excited about, transitioning to different industry, critical minerals, battery materials, supply chain, the vibe and the sentiment, the direction that the nation and the world is going. And, every day brings new challenges, and it's just so much fun.
Well, that's great. Thanks for the background. Okay, so we met, I guess you were doing due diligence, in 2017, and then it took you a year before you actually joined, I guess, full time. The story at that time was one of, optioning and acquiring land. Stitching up the land position was very important, but the story then was all about Carolina. Since then, the lithium story has only got better and better, exciting. But you navigated after raising this capital and the profile. Again, Tesla put you in business. A few months later, Sayona, who had their eyes on this North America Lithium project for a long time, Keith saw and had an opportunity, invested in Piedmont invested in the company at less than a penny, right? It's now whatever, it's been 30 cents. But at that time, they didn't have North American Lithium. And since then, I guess last year, you won the bid from North American Lithium. So I want to talk from an operating perspective. You have slides in your deck here, 3 or 4 projects, however you want to kind of define them, but you have 3 assets and maybe 4 projects. Sequentially, Carolina, the flagship is the 4th project, or it's the last one to kind of come online. But you are now in a relatively imminent producer. And we've seen in spodumene companies like Sigma and Core Lithium and even Sayona pricing in that imminent production of spodumene to be sold to China in the short term until you kind of move things downstream. So could you talk about this asset that you bought? Just, I don't know if viewers understand this, but has been in operation on and off since whatever, the 40s or the 50s. You talk about Back to the Future Carolina Lithium. The only reason that there was Carolina Lithium was because America didn't want to get Quebec Lithium, which was this mine, for their nuclear program. They wanted a domestic source. So this mine was actually feeding the US nuclear program. And then Canada Lithium in Lithium 1.0, I guess in the 2009 or 10 timeframe, it was then sold to RB Energy. Then the market turned away. So it had problems. Then a Chinese group, Jill and Jean, took it over, but CATL switched it back on. I've made a comparison, the recent video that I did, to MP Material. That was a failed mine, went bankrupt, but a lot of invested capital was put in there. The new owners bought it for a song, made some process improvements, have gotten it into production, are selling rare earth concentrate to China, and they have a $5 billion market cap here. So you've come in, Piedmont's come in partnership with Sayona. You helped them get that deal over the line. And now it's fully funded, but you're making these improvements. And Sayona's saying you're going to be in production in Q1. You're kind of saying first half. So you're being a bit more conservative, I think, on that score. But where are you from May of this announcement to now? There have been some pictures of you and the Sayona team. How close are we to this production? And then we'll talk about the economics of that and what that means for Piedmont.
Yeah, absolutely. Thanks, Howard. There's a lot to unpack there. I guess I would say before sort of talking about NAL a little bit, we started our journey here at Piedmont like many juniors do as a single asset exploration company. And where we find ourselves today is a multi-asset business via our investments in Quebec and Ghana. So mineral resources and ore reserves distributed around the Atlantic Basin that ultimately we hope will fund a North American-based lithium hydroxide business, where fundamentally we believe in the spodumene to hydroxide thematic. We believe in the strategy of owning our mineral resources in the ground. We're having substantial equity exposure to them in order to hedge ourselves against variability in raw material pricing over time. We believe in the stronger for longer thematic of both spodumene concentrate and lithium hydroxide prices. And so we think over the course of the next decade, that positions us well to be an important player, certainly in the US battery supply chain by our future projects at Tennessee Lithium and Carolina Lithium. But we are focused over the next 9 to 12 months on the mission critical effort of putting the plant at North American Lithium and the mine back into production. And so we started that effort last year with Sayona in January, with our investment in both Sayona Mining and Sayona Quebec, at the time taking a 19.9% stake in the parent company, Sayona Mining, through their ASX listing, and then a 25% project level interest in Sayona Quebec, which, you're right, at the time owned and still does own the ATA project and the exploration targets at Tansim. Would say that we helped each other with a successful acquisition at the end of August of last year. And although it wasn't until June that we formalized at the Sayona Quebec board level the intention to restart North American Lithium, we actually started spending significant amounts of capital as early as September of last year, immediately upon acquisition. I would say that we remain on track for first concentrate production at NAL in the first half of next year, with commercial shipments starting, say, in the third quarter, with some potential perhaps for an upside case. But I think the schedule that we're tracking at is shipments starting in the summer.
So Sayona is fully funded for this. You're fully funded. So it's just a matter of spending that money and getting things up to speed. But I mean, I guess, will you be having construction pictures that we could see on a monthly basis, just so that we could see it? There have been pictures and it's great. Thoughts on that briefly, and then I'll ask you a couple other questions.
I think some of the thoughts on that, most of the work is in the interior of the concentrator itself. Of course, from Lithium 1.0 till now, there's been some 400 million Canadian invested at NAL over the past 12 to 15 years. So most of the project is built. We're investing about 80 million US from the beginning of the year till next spring to bring operations back into production. Sayona publishes a monthly update, which includes some of the photos of works in progress. And I think there'll be an opportunity to have some investors and analysts on site. That's something that's still in the works.
Yeah, we were hoping that could coincide with Rodney's visit, but it looks like it's going to be a little bit later than that. I want to be clear.
We want to strike the very delicate balance between as much of the work as possible has been completed, so folks have something meaningful to look at, and early enough so that the weather hasn't turned sour and we're able to get everyone safely there and safely back again.
Yeah, I appreciate that. Sayona is a 75% owner, you're a 25% owner, but how does the joint venture work? Like, you have 50%, the greater of 50% or 113,000 tons, and the PFS calls for 165,000 tons, I think it is, or something like that. So based on the current plan, you're the majority of the offtake for life of mine, but you're a minority partner, but there is a joint venture kind of operating it. How does that joint venture work?
Yeah, good question. So functionally, Sayona Quebec, in which we're the 25% partner, is the operator of the North American Lithium assets. Over the last 8 months, Sayona's done a tremendous job in building out the operational team. I'm very encouraged with respect to the quality of the people that Sayona has recruited into the business, and we're fully supportive of that team. So they'll be the operators. They manage the day-to-day business. We, as a joint venture partnership, have a great deal of visibility sort of into capital spend, into technical plans, into operational readiness. I have a lot of visibility into the timing of spend, where we're spending money, who we're contracting it with, what schedule performance, what's budget performance, not entirely on a real-time basis, but I have a lot of opportunity to review and sign off, and we provide input from our side in a support capacity. Over the last, I would say, 9 months, because we're taking decisions together and spending real money, we've put some rigor into the functionality of that board, and it's working very well.
There was some talk about blending OTA ore into North American Lithium, and there is some talk about going to carbonate, not just going, and selling spodumene. So could you talk about, I guess, both of those? How are decisions made about those from the joint venture level?
Pre-bid or pre-award of the acquisition of NAL, it had always been Sayona's strategy that the most efficient operation in the long term would be a combination of the ore bodies at NAL and ATA that involve trucking crushed run-of-mine ore from ATA to NAL. We subscribed to that strategy during the course of due diligence before making our initial investment into Sayona early last year. And so it remains the plan upon completion of all permitting activities and capital construction at ATA to run that processing model. And that'll be about a 2/3, 1/3 run-of-mine ore split, with 2/3 NAL ore, about 1/3 ATA ore feeding into the plant. The elegance of that is that, the ATA mineral resource itself is not substantially different in terms of head grade, but it's fewer larger lenses of spodumene bearing pegmatite with substantially less dilution material than has historically been seen at NAL. So on a fully diluted basis, our expectation is that the head grade going into the plant would increase. The burden on the ore sorting equipment that we're expanding would be reduced, and subsequently the head grade going into the mill and then the corresponding recovery would both improve on a long-term basis. So part of that strategy is to help extend the life of the surface operations at NAL. That remains the plan. Given the change in design from what was initially going to be an open pit mine with a spodumene concentrator, now that's unwound a little bit to an open pit mine with some crushing facilities and truck loading, has some rework to do in terms of permitting activities. And so it might be 12 months or more before we're able to bring ore from ATA to NAL, maybe a little bit longer than that. And so during the early months of operation at NAL, we'll rely on NAL ore only, and that blend will come in over time.
Okay, and then the carbonate plant idea, is that contingent on the blended strategy?
No, they're separate issues. In a recent press release from Sayona providing a market update, they noted that the carbonate plant at NAL is 50% constructed. I would say that from our perspective, if you look at other conversion plants that have been built in recent years, what's actually in the plant at LaCorne probably only represents about 50% of the equipment and the capital needed for a fully functional carbonate plant. So we're not doing any work in the carbonate plant today. There are major elements missing, between the acid roast and cooler, a mill, storage of beta spodumene calcined material, substantial upgrades to crystallization, impurity removal, filtration, packaging, et cetera. There's probably a few $100 million that would need to be spent there to put the carbonate plant into service. What we did agree at a board level is that we would refresh technical studies that had been undertaken in the past at a feasibility level to reevaluate what might be required in some granular detail with respect to a full build out of the carbonate plant. And then once those studies are completed, we'll have a conversation at a partner level about what the next appropriate steps are.
That's a carbonate plant in the works, but there was some commitment, I thought, to the Quebec government that you would do a downstream. It could be carbonate, it could be hydroxide. What is the carbonate market in the United States, I guess, or in North America? Does carbonate make sense?
Yeah, it's a good question. I think what your question leads to is that we have optionality because we have elements of an existing asset in place. We don't have other property away from LaCorne today where we might locate a jointly owned lithium conversion facility. And so What that lends itself to, I think, is a number of trade-off studies that need to be undertaken by the partnership to figure out what exactly it is that we want to do. Manufacturing carbonate at NAL might mean a technical grade carbonate that gets reprocessed into a battery quality hydroxide. It might mean a battery quality carbonate that's used for those types of cathode formulations that favor battery grade carbonate. There's a few things there. I think the hot topic in Quebec for the last probably more than a year is construction at Bécancour. Everybody under the sun wants to be in Bécancour, and that's exciting. It's got river access, etc., but it's an industrial park with a limited number of sites that are build ready today, and so to rush towards a choice like that, for example, whether the labor market in that area can support, suppliers can support. So we've got a few things to think through, and we've got some decisions to make together with our partner on what that looks like. There are a lot of options. We do have certain commitments to Investissement Québec that we agreed to in exchange for their support of a credit bid through the acquisition of NAL that ask us to complete technical studies, including a feasibility study within 3 years of the acquisition date, and downstream production in a range of starting as early as 6 years from the acquisition date. And so those aren't tomorrow or next year, but they're not that far out into the future if you consider how long it takes to permit a facility like that, to raise the capital needed to bring it to market and start production. So
Nemaska with Livent could be building hydroxide, and you have optionality. Why couldn't you sell spodumene into that or other downstream facilities that Piedmont's building, or with the Inflation Reduction Act may just be economically better for the joint venture to build in America, for example?
It may be. The intent and spirit of long-term objectives would be conversion of spodumene within the province of Quebec. The goalposts move a little bit with respect to timing, et cetera. If the facilities are owned by the partnership, or where the partnership has an equity position in, say a conversion facility where there are other partners, versus one in which we sell spodumene concentrate to a conversion facility in the province that's owned by others. I think from our perspective, although it's not in that development progression from 2023 through 2026 that includes, NAL restart, Atlantic, Tennessee, and Carolina, you would look forward to a future that, also included conversion capacity in Quebec. Quebec will be an important contributor to the battery material supply chain over time, both on the cathode and anode side. And I think it would be logical for Piedmont to want to have, exposure to production capacity in that province, both upstream and downstream.
Okay, that makes sense. Thanks for the full answer. From an equity dilution perspective, you're fully funded here. Cash flows from this activity finance a lot of the equity in your other investments, right? Like, people may think, oh my God, you have big CapEx and LHP2, and cash flows in the next 1 to 2 years can go a long way to fund that.
We would expect some cash flow from spodumene concentrate sales next year, but as you rightly pointed out, if commissioning is complete in the first half of next year, we start commercial sales maybe sometime in Q3 through a ramp up into Q4. I would not expect NAL to be at its nameplate capacity in terms of daily run of mine throughput, grade, and recovery, until 2024, because it'll take a number of months to make that happen. Some revenue next year, more substantial in 24, then into 25, and then I think we need to start making some decisions around, what happens in the medium to long term with respect to, where those tons go from a conversion perspective. Before we sort of touch on maybe other elements of the offtake volumes, et cetera, to touch on your point, Howard, I think, through the course of 2023, if we think about what we need to do next year, we're targeting FID in Tennessee at some point next year off the back of completion of all the material permits that we need to build, assuming that we receive a mining license and an EIA in Ghana by the end of next year. Then very late next year, we'll have to be making an election and potentially cash commitments at that time. And then Carolina, is quick on the heels, assuming that, permitting is able to be achieved by, say, the end of 2023. So within a window of the next 18 to 24 months, we're signing on to commitments that will be approaching $2 billion, depending on where inflation goes over the next 24 months, maybe a little bit more than that. And so we need to start thinking about quite chunky levers to pull to support those decisions. We have some of those. We have 2 active ATVM loan applications with the Department of Energy now, one for Tennessee Lithium, one for Carolina Lithium. We have an active grant application into the Department of Energy for Tennessee Lithium. We have some optionality around the ongoing strategic partnership with being led by JP Morgan and Evercore as advisors. We continue to have very constructive conversations with prospective investors at the asset level, both for Carolina and for Tennessee. We have the possibility perhaps to accelerate cash flow from spodumene concentrate sales at NAL through significant prepay. We have the possibility to accelerate cash flow at Tennessee through prepay, and then depending at the time whether capital markets are open and closed, we can always access those markets. And I think folks are well aware of our track record over the last 3 years of the successful offerings that we've done. So there are a lot of things in play. We've got sort of 3 more projects in the pipeline, and their timing is only now starting to crystallize. And then we've got a lot of different sort of funding sources, cash flow from our resale of spodumene concentrate from NAL, potentially a significant source of cash over the next 24 months, let's say.
If I could just do basic math, if you're selling 113,000 tons of NAL at fully ramped volumes in 2024, okay, and it's at $7,000, or 7,700 as Bill was last talk, whatever the number is, 600, 6,000, whatever the number is. So you could be making, and you're buying it at a ceiling price of $900. So, you could be making 500, 400, 500, 600 million in EBITDA in 2024 in that year alone. Is that right?
That math adds up. It assumes we get to nameplate and that the market remains this robust in terms of pricing. We do believe in stronger for longer. If it's that strong, I think we'll be very pleased for sure. But directionally, you're correct. And we think that there's real opportunity for the company in coming from Quebec over the next 2 to 3 years.
I guess also where Howard's angling at, Patrick, and what you're alluding to is if you look at potential prepays and strategic partners, etc., Piedmont could be in a position where it does not need to dilute in order to fund the next projects coming into play. that fair?
I think there are scenarios, Rodney, that play out where that's true, depending on what the readiness of all the projects are from an FID perspective, and the pace and the speed that we want to go at. Maybe that's not true, but I think if all the stars align between loans, grants, strategic partnership, prepay, et cetera, and we're disciplined about how we deploy capital, we certainly reduce the need to rely on capital markets.
Yeah. Okay, great. If one looks at Atlantic, depending on how you develop that asset and the size and scale of the resource by the time FID comes, that's not a massive commitment relative to what you'll be getting and what it'll produce.
Exactly. And, I sort of think about the progression of our capital projects program is good for a junior company like Piedmont. As aspirational as we want to be to take on a project of the scale of Carolina Lithium, $1 billion capex, it's an engineer's dream to build something like that. If you're not prepared, the team doesn't function well, and it doesn't have the expertise and the technical chops, a dream can turn into a nightmare. So the idea that we're deploying $20 million of cash in an $80 million program to support NAL, that builds our team skill set and our partners. Then we come out here and we deploy, say, $100 million in Atlantic, and we build a greenfield, open pit, DMS only mine and spodumene concentrator. Then we move to Tennessee and we deploy $600 million. We build a standalone chemical plant. And lastly, we come back to Carolina and we build the most challenging, largest, most complex project in the portfolio. And I think that sequence kind of is how we're going to transform ourselves from that single asset junior Howard that you first visited back in 2017 to being among the largest lithium hydroxide producers in North America in 5 or 6 years' time.
I think kind of what gets lost from an investment perspective is, yes, and you have all of that potential, but I guess based on how it's maths, if we broadly look at it in terms of the timing and ramp of North American Lithium and then the timing and ramp of Atlantic is, potentially in 2025, if all goes according to plan, because DMS should ramp pretty quickly based on the experience of some of the other assets that have. If you've got 250,000 tons of attributable spodumene concentrate and you make a $4,000 margin on it, that's $1 billion in EBITDA before you've done anything else with the other downstream assets.
You may view Piedmont in an evolution from Carolina Lithium with some of these other assets and projects that have been either acquired or created over time that maybe the market doesn't yet understand well. People are only getting exposed to those stories. They're still works in progress. I think our journey here locally, in terms of the timeline to receive all of our approvals and start construction is well documented. So, if you sort of followed the Piedmont story, you may view us as a North Carolina story with a bit of a permit overhang and some of these other things that are out there that aren't quite well understood. And I was speaking with an investor last week who has been in the stock in the past, and they asked, how should I think about all these things? And my suggestion was, well, pretend you didn't know anything about Piedmont Lithium, and this was your first exposure to who we are and what we're trying to achieve, and build your model and make your decisions based on the sequence of when we intend to bring product to market and the relative certainty or uncertainty that all those things will be successful and when. And so on that basis, you start with the restart at North American Lithium. and the attributable offtake agreement, and then you migrate into the other projects. As a prospective investor, that may or may not change your point of view on what our valuation should be.
Take on that point. If I look at Sayona's stock, its market cap 2 billion Aussie, so call it like 1.5 billion US. Sayona is this project, North American Lithium, in partnership with you, right? And then it's Moblon, right? And then they have some other, bibs and bobs, maybe not lithium, but the driving value creator of the company is 75% ownership, of the project, but only 50% of the offtake. I guess they get paid, they're gonna get paid $900. There's just a disconnect just on that alone. You have material additional projects, on the side of you, and your valuation is lower than people just aren't pricing in North American Lithium, in my opinion. You're right. The people who are fresh to the story should look at this first. I think that it's largely been ignored. Some of your sell side analysts have started covering it.
That's true. That's great. Maybe people aren't pricing in the potential of North American Lithium, whether from our side or from Sayona's side.
Patrick, so given that you've got near-term producing assets, can you give our listeners a sort of a sense of how strong downstream demand is for lithium, and the extent to which the importance of local production in North America is for the regional OEMs?
Others in the company, Keith or Austin, can give more elegant answers to those questions. But what I would say is that we have seen an increased interest and engagement from battery makers who have or are building North American manufacturing capacity and North American-based OEMs in terms of securing local supply or supply for battery materials that will be compliant with all the various elements of the Inflation Reduction Act. So that from prospective customers, that the market continues to remain very tight, and in engagement with sort of all near-term producers is a valuable exercise. And we haven't entered into any sales agreements yet. We've got a little bit of time to sort those things out, and we have yet to place any future hydroxide production from either Tennessee or Carolina Lithium.
When you were picking your plant, and Albemarle is talking about having a southern state, why didn't you pick Texas or Louisiana, and why wouldn't Tesla or Albemarle follow you in Tennessee?
It's a good question. So we went to market to a number of states in the Southeast with an ask around a description of the project that we want to build, an indication of the acreage that we need. We effectively wanted a site that could be ready for development from a permit perspective and a background environmental study perspective as early as Q1 next year. So, we ran kind of a quantitative and qualitative scoring matrix of about 30 properties, and Etowah McMinn County came out head and shoulders above the rest, frankly.
Spodumene may be coming in from various locations in the world. It could come from Brazil, it could come from Ghana, it could come from Australia. It was important to go into the North American Lithium detail. Atlantic Lithium plus North American Lithium, if it's 250,000 tons of spodumene by 2025, that could be $1 billion EBITDA, then Piedmont's trading at 1x 2025 EBITDA.
One of the considerations of the strategic partnering process that we're running would be the quality of that partner, the extent to which they're able to be more than a financial partner, that they can lend both technical expertise and help further credentialize Piedmont as a serious player in the market.
Yeah, I think a big strategic partner for the big downstream stuff that you're doing is important, but always going back to the plain vanilla spodumene, keep it simple, stupid. You know, you've bought a brownfield asset. You know, if MP Materials could figure out how to, you know, export rare earth oxide to China, you guys could figure out how to ship 5.5% spodumene to China, right? And generate those cash flows near term. Those things are fully funded, and you don't need a strategic partner to generate that $1 billion in cash flow. The rest of the pieces you do. So anyway, thank you very much, Patrick. I hope viewers appreciate getting the additional color from you and frame of reference that Piedmont is a broadening universe of credible people and operators that are going to, you know, bring value to shareholders in time.
Howard, Rodney, thank you so much for having me today. It's been great to chat. We can't wait to host you.
Thanks for watching this interview with Piedmont's Patrick Brindle. If you want to hear more, an extended cut of this interview with about 15 minutes of extra content is available for our Patreon supporters. Click on our Patreon link in the description to learn more.